Oh yeah, $26. Right now it is 8:51 p.m. on November 27th. After drawing the trend line below, I noticed a strong resistance zone around the area of 2,653 and 54, where price had just reached the current high after a strong drop in gold, driven by volatility following the recent US election. Clearly, price has broken out above this zone. But remember this, after a breakout, the market often comes back to retest the broken resistance. If buying pressure is strong, price will continue to move higher. But if selling pressure dominates, price can reverse, break back below this zone, and drop much deeper. That is why I did not rush into a trade, and instead waited to see how price action would behave during the retest of this area. In particular, I always check higher timeframes. On the 4-hour timeframe, price is sitting very close to the EMA 200, which is an important resistance zone. This further supports the idea that price could drop back to retest the 2,653 and 54 area before deciding the next direction. That was my plan. If price continues to push up strongly, I will look for a B setup. If price comes back to the 2,653 and 54 zone and drops hard, I will look for an S setup. And just as expected, price dropped sharply, retested the 2,653 and 54 resistance zone, and started to stall. Two candles appeared here, showing a fierce battle between buyers and sellers. One side wanted to push price higher, while the other side tried to hold it down. As for me, I stayed on the sidelines watching this battle. Suddenly, price dropped even harder and closed right below the pin bar wick, a very clear signal to enter an S trade. I decided to jump into the trade immediately. Stop loss was placed above the upper wick of the inverted hammer candle. Take profit was targeting the nearest low around 2,646, with a risk-to-reward ratio of roughly 1.5 or 2. Why hold so much during a push like that? A fast upward pullback made me think price was about to hit my stop loss, but after checking carefully, it was just a healthy pullback. Luckily, the stop loss was still safe. Here is a small tip. If price drops a decent distance and then pulls back only to the Fibonacci 50 or Fibonacci 618 before continuing lower, use the Fibonacci trend-based tool with 3 points. Point 1. I chose the highest price at 2,658. Point 2. I chose the nearest low at 2,649. Point 3 is the highest pullback level at 2,655. From there, you can project the next downside levels based on this Fibonacci trend-based setup. Looking at the chart, the Fibonacci 1.238 level appeared as a potential take-profit zone. So I extended my take-profit a bit deeper, closer to that area, to optimize my profit. Now, all that is left is to wait to see whether this trade brings joy or pain. If you find these insights helpful, do not forget to follow me on Trading Journey, a real and emotional live trading journey. I am here to learn with you and share the most practical, real-world trading strategies. I am 10-Hour Trader, here to help you trade better.